Manchester United has not won a Premier League title in over a decade. Yet financial analysts still rank it among the most valuable football clubs on earth. Forbes and other valuation reports place United's worth in the billions of dollars. That number keeps climbing even as results on the pitch disappoint fans. To understand why, you have to separate the team from the brand. Manchester United is not just 11 players chasing a ball. It is a global media empire wearing a football shirt. The club was founded in 1878 as Newton Heath Railway Works team. It became Manchester United in 1902 after a financial rescue. The Munich air disaster of 1958 nearly destroyed the club entirely. Manager Matt Busby rebuilt the team from tragedy into legend. The 1968 European Cup win cemented United's place in football history. Sir Alex Ferguson arrived in 1986 and changed everything. Over 26 years, Ferguson built a dynasty of trophies and global fame. That era created a fan base that stretched far beyond Manchester. Millions in Asia, Africa, and the Americas adopted United as their club. This global reach became the foundation of the club's financial power. Football clubs earn money in three main ways: matchday revenue, broadcasting rights, and commercial deals. In 2015, United signed a record-breaking kit deal with adidas. That single deal was worth roughly £75 million a year. Sponsors pay for exposure to United's enormous global audience. The club claims hundreds of millions of followers worldwide. That audience size makes United's shirt one of advertising's biggest stages. Even a losing season does not shrink that audience overnight. Fans stay loyal to the crest long after results turn sour. This loyalty is what economists call brand stickiness. Old Trafford itself is a revenue machine on match days. The stadium holds over 74,000 fans regularly. Nearly every home game sells out regardless of league position. Hospitality boxes and premium seating generate massive additional income. United also profits from stadium tours and museum visits. Tourists visit Old Trafford even during losing seasons out of curiosity. The club has become a tourist destination as much as a team. Broadcasting rights add another enormous layer of guaranteed income. Premier League television deals are shared collectively among all 20 clubs. Even a mid-table finish guarantees United tens of millions in TV money. Global broadcasting deals for the league keep growing year after year. United also earns from its own in-house media channels. Preseason tours to the United States and Asia generate huge sums. Stadiums overseas sell out just to watch United play friendlies. These tours function as marketing trips disguised as football matches. Local sponsors and governments often pay appearance fees for these visits. Merchandise sales form another steady stream of income. Replica jerseys sell in the millions across dozens of countries. A new manager or star signing can spike merchandise sales instantly. Even jersey sales rise sometimes, despite poor league form. The Glazer family bought Manchester United in 2005 through a leveraged buyout. That deal loaded the club with significant long-term debt. Critics argue the debt has limited transfer spending and stadium upgrades. Despite this, the club's overall valuation kept rising under their ownership. Business analysts separate club value from club performance for good reason. A football club's worth is based on brand, revenue, and assets, not solely on trophies won in a given season. Compare this to companies whose stock rises despite disappointing quarters. Brand equity often outlives short-term performance dips. United's history gives it something newer rich clubs cannot buy easily. Decades of global recognition built through actual sporting success. Names like Best, Charlton, Cantona, and Ronaldo built that legacy. Each era added new fans who stayed for generations. This intergenerational fan base is nearly impossible to replicate quickly. It gives United pricing power that smaller clubs simply lack. Sponsors pay premiums specifically to associate with that history. Financial institutions, airlines, and tech companies have all signed United deals. TeamViewer's shirt sponsorship was one of the largest in football at signing. Even when relegation threats haunt other clubs, United remains commercially untouchable. The Premier League's global popularity lifts every club within it. United benefits from being the league's most recognized international name. Casual fans abroad often know United before they know the league itself. That recognition converts directly into commercial and licensing revenue. Real estate and infrastructure around Old Trafford add further asset value. The stadium and training facilities are appreciating physical assets. Talk of a new or redeveloped stadium adds future value projections. Investors and valuation firms price in future potential, not just today's worth. A modernized Old Trafford could significantly boost Matchday income further. New ownership investment under Ineos has renewed some investor confidence. Structural changes in football operations signal long-term planning. Markets often reward long-term vision even during short-term struggles. Compare United's finances to a struggling but iconic consumer brand. A brand can lose market share yet retain enormous underlying worth. Recognition, history, and infrastructure hold worth beyond quarterly results. Football clubs increasingly behave like these kinds of enduring brands. Private equity and sovereign wealth funds now closely watch club valuations. Manchester United remains one of the few publicly traded football clubs. Its shares trade on the New York Stock Exchange under ticker MANU. That public listing means transparent financial reporting every quarter. Investors can see revenue streams clearly, not just headlines about losses. Those reports consistently show resilience in commercial and broadcast income. On-field struggles show up more in matchday and prize money. Prize money is actually the smallest slice of the total revenue pie. This explains why poor league finishes barely dent overall valuation. Fans often assume losses on the pitch mean losses in the bank. The financial reality tells a very different story entirely. United's youth academy also adds long-term value through player development. Homegrown stars increase both sporting quality and commercial appeal. Talents developed in-house often become future global marketing assets. This pipeline reduces reliance on expensive external transfers alone. Analysts note that fan anger often targets sporting decisions, not finances. Protests against ownership rarely affect sponsor commitments or broadcast deals. Corporate partners sign multi-year deals insulated from single-season results. This insulation is precisely what keeps valuations climbing regardless of form. Some economists compare football clubs to media companies with live content. Live sport remains one of the last forms of appointment viewing. That scarcity gives broadcasters strong incentive to keep paying top clubs. United's matches guarantee viewership numbers advertisers still crave heavily. This dynamic protects the club's core revenue even during rebuilding years. Ultimately, Manchester United functions less like a sports team. It functions more like a diversified global entertainment enterprise. Its trophy cabinet reflects sporting history, not present-day finances. Its balance sheet reflects a business built for long-term endurance. That is the real answer to why United remains worth billions. Not because it always wins, but because it always sells.